Welcome back, and Ashi Anand from IME Capital is now joining us to discuss the road ahead for the markets. Ashi, good morning. Thank you so much for joining in. And I was going through your note and some very interesting aspect that you highlighted, that you are focusing more on the wealth management side when you want to play this financialization theme, but you want to stay away from the broking aspect of it because of the regulatory headwinds. So be that as it may, but even for most of these wealth management players, they are part of the brokerage itself, right? Even for, let's say, stocks like Angel One, they have a wealth management business that is not listed. For ICICI, they may have a wealth management business that is not listed. So how do you play this theme? Because there are very few pure play wealth management players that are listed.
Firstly, thanks a lot for having me on the call. So in terms of just wealth management overall, I think we're bullish overall on the capital markets theme, right? So we like wealth management, we like asset management, we like insurance. Now, within kind of capital markets and within specifically in wealth management, we currently focus on 361. This is primarily focused on wealth management, doesn't have too much of the other broking setups. And I think that's broadly one of the reasons why we don't have exposures at this point in time to financial or capital market plays where the wealth management is intertwined with some of the other businesses. I think the core concern currently on kind of broking is that there are clearly certain regulatory headwinds which are kind of around the corner. There are various consultation papers going around, especially around the very high levels of F&O kind of volumes that are happening. So that is a space that we think is currently probably a bit overheated, and we'd like it to kind of just cool down a bit, understand how the regulatory framework would actually play out. We do like broking over the longer term. It's just that we see certain short-term headwinds.
Okay. Ashi, I wanted your thoughts on the real estate space as well. You speak about real estate prices starting to move up, but a lot of these stocks have run up. Real estate pricing in the last 2-3 years has already gone up by 30 to 40%. In fact, some of the companies like Prestige Estates said that they will not be taking price hikes because now it could impact demand. Do you think this is still a space you would like? Because we are still in the middle of the real estate super cycle that we are talking about.
So I think broadly that is our view, right? We think we are still probably in the early to early mid stage of a real estate cycle. What you've really seen is after a decade, which was broadly lost for this entire industry, you've seen 2 years of kind of recovery. You've seen demand coming back. Now, underlying kind of drivers of demand are very, very strong as kind of nuclearization, people move more into nuclearization, urbanization, rising aspirations, all of these, and rising incomes. All of these play very well into kind of real estate demand. What you are also seeing in the real estate sector is a very sharp shift away from unorganized towards organized players, which is very positive for kind of listed companies. Now, over the last decade, there was a very large increase in kind of inventories, and which is why real estate prices were largely stagnant. Across cities, what you have seen is inventory levels have kind of come down and launches are kind of keeping up with demand. But as inventory continues to move down, we actually believe that you could see a multi-year kind of a period where real estate prices continue to move up. Now, a combination of real estate prices moving up, interest rates coming down, which could help mitigate some of the affordability impact, is where we kind of see a very, very strong bullish outlook for the sector. And if you're just looking at underlying growth across real estate companies, despite having 1 or 2 good years, across the board, most real estate companies are guiding for 25 to 30% plus pre-sales growth. And if you just look at how economies have developed overseas, I think you kind of have multiple years ahead, and which is why despite the run-up, we continue to be positive on the sector.
What about capital goods, Ashi? The stocks have seen a remarkable run over the last 12 months. You still continue to be optimistic, although you're saying that you may temper down your return expectations. What kind of tempering down are you advising your clients to have?
So capital goods really was a very strong outperformer over the last year. We kind of now expect capital goods to probably deliver returns in line with the overall markets. What you are seeing is very, very strong business momentum. The business momentum is being driven by very strong government initiatives around reduction of corporate tax rates, PLI incentives, and there's also a large value migration shift which is happening away from China towards various economies, including India, as global companies try to de-risk the supply chains. Now, this basically lays the foundation for a multi-year capital goods revival. What you saw last year was a very sharp run up in these stocks, possibly really factoring in all of these positives and possibly a bit higher. We are very selective about the capital goods companies that we are investing in. Given that valuations have moved up, we don't necessarily see them being able to outpace, or we don't see further valuation re-ratings. But because earnings growth is strong, that should actually come through into stock prices, and which is why we expect them to continue to do well going forward.
Okay, it is a very stock-specific market now, right? Thank you so much, Ashi, for joining us and joining us with all your thoughts on the market fundamentals. With that, we'll step into a break. As we do that, here's some good news for our viewers. India's business news leader is now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.